This is a big one because given what we've been seeing with Bitcoin on this Heikin Ashi chart, I'm going to show you what this means in just a minute. We have got some potentially really exciting things to talk about in this video for the long term for Bitcoin, potentially indicating a conservative target of $130,000, and this to me is very exciting. You guys know the deal. When I pull things like this up, I'm not doing this just because I want to talk about a crazy price target just to get clicks. That's not what we're doing here. There is some genuinely really cool analysis here which I'm going to be tracking throughout the next year and giving you guys updates on, and this is the first time I'm going to be talking about it. And before I get into this is actually based off 𝗏𝗏𝗏𝗏's MRI indicator, so go ahead and type this into Google, into Google, not the Google, if you want to get his indicator. But let's take a look at this. So the first thing that I need you to understand before we get into this very interesting video is that we are using Heikin Ashi candles today. So what this means is essentially we've got our normal candles. They look like this. They're colored in my blue and orange scheme, as you guys have grown to love. Heikin Ashi candles are a different version of the same thing, where the OHLC up here is calculated differently. Now I'm going to stop this video here. If you don't know what OHLC means, you need to pause this video and you need to go into YouTube and type in 𝗪𝗪, my channel name. I'm going to show you what to do here. Bear with. You need to put in 𝗪𝗪's how to trade and watch this video. It's also always linked in the pinned comment down below. That video is going to show you what this means, but in short, it's what constructs the candle. And Heikin Ashi candles are constructed slightly differently. I'm going to leave the math on screen for you here, but I'm not going to go through it. The only thing for you to keep in mind with the OHLC here is that what the Heikin Ashi candles do is they smooth out the price action. Okay, that's the bottom line. If you look at the candles that we have on screen right here, you can see kind of what these trends have generally looked like. They're a little bit spotty. It's not super clear that we were trending up on this occasion. It is very clear because the price was going up, but it can get much more clear when we switch on to the Heikin Ashi candles, and you can see actually it looks like a really nice period of upward price action here, a really predictable period of downward price action here. It constructs the candles differently. It's not something, in my opinion, to base your entire analysis off, but to supplement analysis and to just give you a different perspective. It's really useful. The other day I was using the inverse chart. You would have watched that if you're subscribed, so shout out to those of you who are engaging with the videos as well and smashing up the likes. Thank you all very much, because that was a very important one. But what we have right here, ladies and gents, is actually quite exciting because with 𝗏𝗏𝗏𝗏's MRI indicator, it sometimes fires off signals that in this case have actually meant that Bitcoin could be ready to bottom out on the large time frames. We're on the monthly time frame right now, so we're looking at this quite zoomed out, and I'm just going to change this right there just to declutter this chart a little bit. And all I want you guys to focus on, I'm not going to talk too much about how this is constructed in this particular video. If you want to learn about it, just go to 𝗏𝗏𝗏𝗏's channel. All I want you to focus on is when these ones fire off with these green arrows right here. I believe they're arrows or symbols or whatever. There's only 3 instances where this has happened on the chart right here, and I've actually got them pointed out pretty nicely over here. This was the bottom that we saw back in 2015, followed by the 1. We had another 1 right here. This was the bottom in 2018. This is when Bitcoin fell from 20,000 down to 3,000. It fired off a 1 right here, indicating that the trend could be ready to reverse to the upside. And we've got another 1 right here as well. So we bring it back to the chart, and the reason that this is very significant, guys, is that this is telling us that with time-based analysis, the MRI indicator is a time-based indicator. With time-based analysis, this is telling us that the market has trended down enough and is now ready to at least temporarily correct upwards, if not potentially reverse upwards entirely, right? And these bearish ones have been pretty accurate too. We have a 3 right here. This called the top in the market. We had a 1 right here, somewhat near the top. I don't know. Don't want to give it too much credit there. And we also had a 1 right here that called the top very well. So, fairly reliable on the upside. Another 1 right here. You know what I mean? Like, it's fairly reliable on the upside, but it's much more reliable on the downside, because this did essentially show us when the market bottomed out. And we've got the same thing back here. here, and we are now doing the same thing again where we are in the present moment with the market. And the reason that I think this is really important, guys, is if we look at this chart and just kind of take a bit of a step back right here, you know, it's pretty clear to see that we've had quite a relentless downtrend right now. I mean, you know, if we kind of count how many candles are red here, we've got 10 bars selected. I know it says 9, but if you counted it, it's going to be 10. That's quite a lot, you know, to be trending down. Right here we had 13, well 14 actually, so about 40% more. Over here non-stop we had 10 bars as well, with a couple before as well, you know. So generally these bear markets, they can go on for quite a while, but the fact that it's gone on for so long now, I mean, and these are monthly candles, guys, so that's 10 months basically of you know, consecutive closes being lower on average. You know, again, that's what this Heikin Ashi formula gives us, is more smooth average based price action. And that is really, really important because it allows us to visualize this trend pretty clearly, guys. This trend, you know, has gone on for a very, very long time. And, you know, if you look at this on the linear chart, for example, it just looks like it's screaming for a bounce to me. You know, I mean, I just don't see things like this happening where you don't get a nice bounce, and still 28K does look like the key level for that to happen at. You know, it just looks like the market needs that, even if it's going to keep dropping down. You know, there's got to be something that kind of gives you that liquidity, you know, but where everybody is generally actually quite fearful. I mean, we did pick up a little bit obviously with the recent pump, but guys, we're still in extreme fear. You know, I mean, it's not like people are you know, jumping on tables and inviting models onto yachts again or anything like that. You know, this is still very much bear market territory. You know, nobody's affording yachts, people are barely making their car payments right now. And so you know, this is definitely, I think, you know, showing in the market. You know, crypto people are just not in a good financial position right now. They're generally quite bearish, they're generally quite scared and upset with what's going on in the market. And again, you now consider just how long this has been going off for. The fact that an indicator that I would say is actually quite reliable has fired off, you know, to me that's a really big deal. And I don't talk about the MRI indicator too much. Let me know down in the comments if you want me to talk about it a little bit more. This is obviously 𝗏𝗏𝗧𝗏's indicator, so you know, I leave him to talk about it, but it is something I wanted to bring up with you guys. And you know, what's really interesting about this is the timing, right? You know, generally Bitcoin has got to bottom out, and I don't have a chart for this unfortunately, but generally Bitcoin has got to bottom out about 500 days, actually I do right here, yeah, about 500 days before each halving. So this red line right here represents when Bitcoin halved. If you don't know what that means, it's basically where Bitcoin becomes more difficult to mine. You need to Google it. That's pretty important knowledge for Bitcoin traders, in my opinion. Unfortunately, it's just like that with Bitcoin. You know what I mean? This is not a standard asset. You need to understand a bit of the tech behind it. If you don't want to, that's up to you, but I don't think it's smart, and I don't think it's financially responsible either. So your call, depends. But 500 days before the halving right here is when the market bottomed with this circle. On this occasion, it was also 500 days before the halving. We are now just about 500 days before the next halving as well, which is going to be in March of 2022. So you know, that lines up really, really nicely. I mean, we could give it another month and then it would be actually directly in line with the previous two times. But the point is that the time frame lines up really, really well. And the next thing I've gone ahead and done for you is just kind of measure the strength of these bull markets. Now this is where it gets really interesting, and we start talking about that very exciting 130K target. You know, this is where we really start getting that lotion out. I can already tell you know, some of you are reaching for it. Before I get there though, guys, I still have to remind you guys that there is an $8,000 bonus available to you for BitGet if you want to check out one of the trading platforms that I'm trusting with my own trading activities. So you guys probably have built a picture right now that I'm very, very diligent with what I do. Hopefully that's the picture you've built of me. That would make me feel very happy. And because of that, I take what I trade on very, very seriously. So, you know, the fact that BitGet is offering something so cool and it's something that I use myself, I think is a pretty cool combo. I want you guys to go ahead and check them out just to get that bonus. If for nothing else, it helps out the channel as well. All you got to do is head down to that link in the description down below, get your $8,000 bonus, and then come right back to the video. It sounds fucking crazy, but that's as simple as it is. So go ahead and check it out in the description down below. But moving us back to the chart right here really quickly, I've actually gone ahead and plotted kind of how big these pumps were. And if we measure this one right here, this was a 9,143% pump. Quite spectacular. I don't want to think about how much how much money I'd have if I was in the market back then. I don't think you do either, let's be honest. And if we look at the next one, it was only a 2,200% pump, right, from the very low $3,000 range to the very high $60,000 range. And if we take a look at what this meant, right, this was a 9,143% pump. All I want to do is just kind of punch this into Google, you know, and show you a little bit of the math here. It's actually really interesting. What am I doing? Wrong button. So 9,143. If we just reduce this by if we knock off 75%, so basically we assume, I don't know what this is, we assume that the next pump is 75% weaker, we're still going up by 2,200%. And if we go back to our chart, that lines up really, really nicely. So if we assume that the same thing happens again, that each subsequent major bull market becomes 75% weaker, we're still looking at a 570% pump, okay? That's one of the main things that I want you guys to keep in mind right now. And if that is what we're looking at, and if we are looking at a bottom around these prices, which is around $20,000, which is around our previous all-time high, it's the most obvious place for the market to find the bottom. Does it mean we will? Absolutely not. And you know, one quick note I want to make before I continue and talk a little bit more about this 130k target, if you're excited, do me a favor and smash up the likes. One of the other things I really want to bring to your attention, first of all, is that this is not a video that you can judge if it's correct or not within the next 24 hours. Most of you already know that, but for those of you who don't, this channel is not for you. We are not entertaining such simple-minded idiots. That's not what this is about. Obviously, every single video I put out, you know, is going to require some time horizon to know if it was correct or not. But that's totally fine, because that's my job. I do it for you, and obviously, you guys have seen that when I'm right, I definitely tell you about it, but when I'm wrong, I also tell you about it every single time, and that's my job. That's my commitment to you. So you know, one of the things I want you guys to keep in mind when you watch me and other YouTubers is that you know, we're not making analysis for the next fucking 10 minutes. You know what I mean? Some people are, but that's not my game. I'm literally on the monthly time frame, so come back in a year. You know what I mean? Like, this is gonna take a while to see if it's legit or not, but obviously I'll be following this up myself, because I'm a Bitcoin trader. This is important to me, you know, so I'll be continuing to give you all of that information. If you're interested in seeing the kind of trades that I'm making, of course, that's all going to be available with these steps on screen. Still got that 50% discount, but we're going to be ending it very, very soon. We've recently pulled some huge gains with Phantom over 100%, got knocked a little bit on Bitcoin, lost 6% on Bitcoin afterwards, but that's okay. If I'm taking 20 steps forward and 3 steps back, I'll take that ratio. Pretty decent. I take that ratio in a lot of context, and especially in trading, so that is absolutely phenomenal. You know, and moving back to what we're looking at with the price action right here with this target of 130k, you know, I think this is quite exciting. I think it's quite plausible. I think it's almost a little bit disappointing. You know, we're only doubling the previous all-time high, you know, and that's exactly why I think this is almost quite a poetic target. Now, do I think the market is going to stick to this? I mean, look, a million things are going to change between now and getting to 130k. If we ever get there, because nothing is guaranteed. You know, a lot of things are going to change. The market is going to be in a different place. But what's true that I know of for sure is that the tech community space has never actually been stronger. You know, we are obviously seeing a lot of shitty projects die. That's brilliant. That's very, very good for us. That's how free markets work, and it's a very, very beautiful, efficient model. You know, but what we are seeing at the same time is that the core things that work are strengthening. You know, the network is getting stronger, more secure, more stable. You know, and at the same time, adoption keeps rising. So overall, is the price action going to continue being up? Nice, we're getting a storm. I love storms. Is the price action going to continue going up? You know, over the long run? You know, if you think the answer is yes, you know, and you like the fact that, you know what I mean? Like, is this a coincidence? You look at the title of this video, we're 500 days away, 500 days away, 500 days away from each of these halving events, and we've got the exact same bottom indicator that flashed to the past 2 times as well. You know, I'm seeing a very obvious pattern right now. You know, does it mean it's going to come into fruition? Absolutely not. You know, I think one of the things that this market is still going to be at the mercy of is the dollar. But the good news is that the dollar has seen a little bit of a drop in this. Look at how the Heikin Ashi also displays the dollar rally right here on the monthly time frame. It's actually quite beautiful. Like, I don't know about you guys, it genuinely makes me a little bit emotional just seeing such beautiful price action. It appeals to every little, I was gonna say inch, but I'm European. It appeals to every little centimeter of OCD inside of me, assuming OCD was a physical trait. So I really like the way this this candle setup presents price action. We don't talk about it much on the YouTube channel, but if you want me to talk about it a little bit more, I can certainly do so. Switching it back to the candles though, because this is what I just want to focus on, the normal candles right here. You know, you can see quite a steep drop for the dollar right here. The area that I said should turn into support for the dollar didn't. So that's pretty good. And actually, you know, on the flip side of that, the SPX, you know, has actually seen a bounce off exactly where I said we'd get a bounce. So you guys already know that. You've been subscribed, you've been hitting up the likes, so I know that you were there when I made that price prediction. That was quite an easy one. I was quite confident about it. You know, and I said that the next area of resistance for the S&P 500 is going to be up here, you know. So that's kind of the short-term stuff. We are right now brushing up against the ceiling. Are we gonna hit our heads and then drop back down? If we do, this could turn very bad. This is, I think, a key decision point for the market. But if it does actually just keep rising up, you know, that could clear the way. And again, I think Bitcoin is going to be at the mercy of factors like this. However, what I'm seeing with the SPX right now is beautiful. This is the best case scenario that could happen. That's it, full stop. That's, as far as I'm concerned, this is the best thing that could possibly be happening in the indices markets right now. Is it the best thing that could be happening for the dollar? I don't know. Obviously, the dollar is still in a very strong uptrend. It's going to take something really intense to knock the dollar off this. You know, I don't think that's necessarily going to be happening, but you know, what I do think is that at the moment we are in a bit of a fall. This can get worse depending on inflation reports and all the other complex boring stuff, but you know, with the SPX right now just kind of approaching some of this resistance right here, still trending quite nicely. You know, I think we've got some decent headroom, and we move it back to that Bitcoin all-time history chart. You know, put this onto the monthly time frame again, switch it back to the Heikin Ashi candles, and we talk about these kind of you know, bigger ideas again. You know what, like, I just don't see that this is significantly different from treatment that we've had in the past. You know, perhaps it could go a little bit longer, but you know, we really are doing things that we've done quite a few times before. I mean, you know, 1, 2, 3, maybe 4 if you're being generous. We've done this before. It's not our first time that Bitcoin is, you know what I mean? And it doesn't even look too bad. It really doesn't. You know, you look at the crash right here, you look at the crash right here. We're doing better this time. This is actually, like, percentage wise, this crash isn't actually that bad. Let's put this in perspective really quick. From high to low, this was a 73% crash using Heikin Ashi candles. It was a little bit more than that, I think, with normal candles. But if we look at the previous bear market, that was 83%. If we look at the one before that, that was 87%. And each additional percentage loss below, you know, like 70%, 80% makes a big difference. You know, I mean, if it's the difference between minus 83 and minus 87% is huge. It's really big. Just do the math on this. I'm not going to waste your time with this, but just punch it in a calculator. It's going to scare you. That's why saving money is much more important than making money as a trader, and at least in my opinion. And this is one of the approaches that we take when we, you know, run through, you know, what, in my opinion, to me, what successful trading looks like. You know, and obviously many of our members have been able to take that, run with it, fly with it, take it to bloody outer space, you know, and do very well with it. And of course, being able to see me implement those same lessons in real time as well, just following these steps on screen. And just your quick little reminder about that 8K bonus. Now that we're coming to the end of the video, go ahead and check it out. If you haven't done so already, just pause and come right back so that you can get that bonus right there. But yeah, like I said, Bitcoin has done this before. You know, we've seen bigger crashes before as well. Like, this really isn't that bad compared to what we've already seen in the past. There is, again, a big difference between a minus 73% crash and a minus 87, 83% crash. It's a very large difference. You know, and so, and time wise, you know, it's been like this for quite some time as well. If we look at, you know, when we set our kind of first main high, obviously the second high wasn't substantially higher. You know, we have now been in this for 18 months. 18 months, 1-8. That is ridiculous. That is absolutely insane. You know, so quite a large period of time that has elapsed in this market right now, and we are you know, starting to show signs that generally indicate huge upward price action. So you know what, gents, if you've had the lotion out during this video, I don't even blame you on this one. You get a pass. You get a pass, gents, right here. You yeah, I get it. I get it. It's exciting. So if you want to keep up to date with how this looks, I will give you those updates as time goes on. Hopefully this is right. I don't know, you know, are we still going to be sweeping lows? Well, you know, with my more short-term, mid-term analysis, you know, this is quite long-term analysis. They can be different. You know, this is part of you know, having how do I say, a good grasp on TA. You know, right now we're actually looking okay. I'm not going to talk too much about this at the moment. I'm going to save this for the next video. But you know what, I mean, if we start kind of dipping down a little bit, I think we're going to be okay. I think we could capture some support. It's always just going to be, do we swing below the prior low, right? So our prior low at the moment is pretty damn low at 18.5. You know, I don't want to see us dropping below 20. And the good news again is that we do have now some support areas. You know, we could be able to get a bit of a bounce right here, or so on. And you know, some indicators are going to start supporting the market as well. I know I said I'm not going to look at this, but here I am. I just get lured into it with this market. One day, by the way, huge EG cloud. We're about to hit it again. Actually, we're hitting it right now. So please keep that in mind as well. The last time I was warning you about this, the market did crash down quite a bit. I actually thought, like I said, that that Bitcoin wouldn't have a problem with it, but I was warning you guys that it's there, and I'm doing the same thing right now. This time I think there's a, you know, potentially higher chance that Bitcoin has a problem with it, just given that we are still setting kind of lower lows, lower highs, but we are setting higher lows, kind of. So anyway, this is something to see later on. I'm not going to talk too much about it at the moment. Again, just a bit of momentum moving average. I'm still doing it. I'm saying I won't, and then I'm doing it. But yeah, EMA coverage right here, potentially offering Bitcoin a little bit of support if we do dip down. So that is looking good to me. Next support levels at you know, the kind of high, next resistance levels are going to be towards the top end of the 22k range. 24 also an important area, but I mean it this time. I'm not going to talk about it now. I am going to save that for the very next video. So between now and then, if you want to take advantage of this $8,000 bonus for signing up to BitGet, then check it out with the link in the description down below. If you want to jump inside of VIP, watch me trading in real time and all that beautiful stuff, then follow the first link in the description down below. And these 2 additional clicks will show you how to get in. There's no sign up process required. There's no download required. It's very, very straightforward. And I will see you on the other side. All right. Hope you've enjoyed this one. You know what to do if you have. Like, subscribe, tick the bell, and I'm out. Bye-bye.